Hello everybody, welcome back. In today's episode of the Trading Bootcamp series, we will be looking into liquidity part 2. What do I mean? I mean minor buy side and sell side liquidity, swing highs and lows, invalid sweeps versus valid sweeps of liquidity. And I hope you guys enjoyed it, so let's continue on to the video. Alright, so as you guys heard from the intro, we are going to be looking into swing highs, swing lows, minor buy side, minor sell side, and some liquidity sweeps, basically revising the liquidity runs and complementing the liquidity runs and the valid liquidity sweeps. We are going to be dealing with that all in this video, so I hope you guys enjoy. Now, we're going to start off with these two concepts, which are really important. It's the minor buy side and minor sell side, and swing highs, swing lows. So the easiest of them all to decorate is actually the swing highs and swing lows, just because, as the name suggests, they are swing highs and swing lows. Now, how are they formed? We will look into some charts examples in the future. Just let me finish my explanation, then I'll show you some chart examples. But the swing high is basically the first, depending on a move, but normally the swing high is usually the first one. What do I mean by this? So, as you can see, price moves from the left to the right, and the swing high is actually the one that gets formed. For example, even if it is wrong one. Even if it is like this, and then this turns out to be the swing high, this is, it's a little complicated to explain it, but basically the swing high is always the first one, just because the charts move from left to right and not from right to left. Now, swing highs are basically the high of an impulsive move up or down, and the swing low is the low of the impulsive move up or down. That's pretty simple. And as you guys saw from my I don't know if you've seen it, but I will put it right here on top. I believe it's trend lines. You will look into the impulsive moves and what categorizes them as impulsive moves in self, and from those impulsive moves you can actually find the swing highs and swing lows. Now let's move on to a very important concept, which is the minor buy side and minor sell side liquidity. So you have price trading in a range. That is what normally you want to be having, because if price is not trading in a range and you're just trading continuation, you will not have fixed liquidity points, which will lessen your chance of winning that trade, even if it is an A+ setup. So basically, if you don't have liquidity in your trade setup and your everything, the trade is basically going to suck. Now, why is that? Because liquidity, as I previously mentioned in all my videos, I'll post the liquidity video right here. As I mentioned in a lot of videos, liquidity is basically where the markets actually grab price so they can basically make money, right? The banks and institutions, they grab points, they grab stop orders from people, and from people and institutions and banks mostly, and then they buy or enter, or they sell or enter, and then they make money or lose money. It is what it is. That's why if you're trading continuations, it's a little bit worse than just trading with liquidity. Now, when actually trading in a range, the range can be so big and so huge. Like, for example, this impulsive move that formed the swing high and swing low can be so big that price actually never reaches the buy side liquidity and the sell side liquidity, the two main sources of liquidity. Now, why is that? Because it can either be this impulsive move happened way too fast and way too strong. It can be with news or with events that happen, especially now with Trump, that is just saying shit. It is what it is. And the minor buy side and minor sell side are actually going to be your basically fake buy side and fake sell side liquidity. Now, what do I mean by this? So with the minor buy side and minor sell side, they have to act as your primary buy side and sell side. This may be a little confusing, but you will understand this very quickly. Now, imagine that you are trading in a range and you're basically reducing the range. So this was the initial range. For example, I'll mark it out right here. This was the initial range, and you're reducing from this all the way to this. You see, it's a drastic cut in the range, and that could lead to very much winning trades. And these minor buy sides and minor sell sides, they pretty act as the same. Just some people, they don't focus on the minor sell side and minor buy side. I don't know why, but they are basically the reduced version of the range of the buy side and the sell side, and they are basically as much important. They are basically as important as the buy side and sell side. They're just the original ones, but basically smaller in a smaller range. And yeah, they act pretty much the same thing. That is why it's really important to know this, because buy side and sell side are the main two components of liquidity that everyone should know. Now, I haven't mentioned the swing highs and swing lows can be identified with forming the buy side and sell side. So when you identify the swing high and a swing low, you can mark out from that wick to that wick, and you can mark out your buy side and sell side liquidity. Now let's look into some examples. So right here, as you can see, we have this drastic impulsive move down. This was New York session with a lot of news. And we have the impulsive move down that formed the swing high, as you can see right here, and the swing low. Swing high is first. We have the swing high, pretty dump on price. Swing low formed, and now we have the buy side and sell side marked from the swing high and swing low. Now, price, as you can see right here, is actually the weekend, but price never trades on weekends. I mean, Nasdaq wants to open 24/7 trading, which will be the same thing. But basically the range, instead of being this big of a range, it actually becomes this big of a range. So these two wicks, as you can see right here, this wick and this wick act as your buy side and sell side liquidity respectively. Man, sorry for my cough. I'm really bad for my throat. Pretty messed up. But yeah, pretty simple stuff. The swing highs and swing lows, and then you have these micro swing highs and micro swing lows. Basically the same thing, but smaller in a smaller range. That is pretty much what you have to know. And this was probably a smart money technique that you can watch that, and that's why price is going down. That may be, but I didn't check. But yeah, if you wanted to trade this, man, my cough is bad. So imagine that you wanted to trade this because it's New York Open, for example, and you actually trade New York Opens. So instead of actually waiting for this range or this range to get swept, you can actually wait just for the minor sell side and minor buy side to get swept, and then target in your direction for the liquidity sweep. But now, for you to know if the sweep that happened on the minor buy side, on the minor sell side, or on these two big liquidity points, you have to know if the sweep is actually valid. Now, how can you know that? Well, it's right here. All right, so as you can see right here, let me actually just fix this up. All right, so let's start off right here with the valid sweep. So the valid sweep is pretty much what you learned from the beginning. It's a range. The range gets swept, and then you get a continuation. But now, how do you confirm, not 100%, because trading is still probability, but how can you strongly know if the liquidity sweep is valid or if it's invalid? From two things. From imbalances taken out, I will show you that in the examples, or this candle. That's why the first ever trading episode was actually talking about candles, because although I do not trade candles because I'm not a swing trader, I use them to identify if the sweeps are valid or invalid. So starting off with a valid sweep, if you have a liquidity sweep and then a strong rejection to the other side, so as you can see right here, price swept this low and then rejected impulsively with this candle, you can basically confirm that the sweep is valid just because of the impulsiveness and the volume that this candle has in comparison to after the sweep. Now, what do I mean by this? So you have the sweep, right? The candle can be bearish, can be whatever, can close. I see a lot of guys that say that if a candle body closes below the low, it's an invalid sweep because the sweep should only be with the wick. That's fake, because I will show you there. The sweep can be just the body candle closing, and then if you have a strong rejection, it can still count as a valid sweep. And yeah, this is pretty much the same thing to an invalid sweep, which the invalid sweep is basically the opposite. So in here you have the rejection, you have a sweep of the low, in this example, a sweep of the low, and then a strong rejection upwards towards targeting this buy side or something like that. Whereas in here, you have a low, and so also trends can help with this. So, you can't see right here really well, but This can be a downtrend, and a downtrend, you got a sweep of liquidity, and then after that downtrend, you get a strong rejection upwards, which can mean price is flipping. But don't trade just off this candle, just this because it's trading. You need to have another confluences, which you can learn by learning strategies. And basically, yeah, it is what it is. Now, the invalid sweep. The invalid sweep can be the same. The invalid sweep is exactly the opposite. So you have a low right here, right? man, my cough is bad. I'm really, really sorry. So you have this low, right? And then price just closes with a continuation candle. Continuation candle is the same thing as this rejection candle, but instead of closing in this way, as it should have to be a valid sweep, it closes below, strongly bearish, basically claiming that the sweep was not. So the entering of new engineered liquidity was not enough for price to stop it, and sellers are still in control. Now let's see some examples. I hope that helped a little bit. Oh yeah, so yeah, just showing you a little bit, man, fuck. So you can see, look, sweep right here, and as I previously mentioned, some guys say if it closes with the body on this wick, for example, right here, you have this wick, price closed with the body, this is an invalid sweep. That is basically bullshit. That is really bullshit. Do not follow that advice. Just because, look, we have candle body closures in here and in here. And then what happens right here? We sweep London. This is London. Man, fuck, I'm dying. You sweep London, and then you have this impulsive rejection. And what happens right after that? You get into the accumulation because it's Saturday and it's the weekend. But yeah, if it weren't the weekend, this would have been targeting this. Now let's actually look into examples that did actually happen. Now you can see this is called Asia high, and Asia high got swept. How did it got swept? And as you can see, look, this wick that I'm circling got swept with a candle body closure. It can be with the candle body closure, it can be with the wick, and then after it got swept, you see this huge candle to the downside, which is the thing marked in yellow. You see this huge candle to the downside, and that basically means that the sweep was valid because, as you can see, so we were trading in this range. Price came all the way back up to Asia high, swept Asia high, impulsive move down, so a pretty big rejection candle right here to settle things off, and then you can see we started a little downtrend. Now I also mentioned that it could be with imbalances. Now as you can see right here, we are in the 15-minute, and we have this 15-minute fair value gap right here that I'm going to change to a 15-minute. So you had this pretty big 15-minute fair value gap right here, which price, after closing with this pretty big impulsive downwards candle, it basically marked the death sentence to this little trend that was happening, just because we have this closure of the 15-minute fair value gap basically turning into a inversion fair value gap. Really nice. And what happens when it turns to inversion fair value gap? In this case, buyers do not take control because they got just invalid. They got closed by, and this support got basically fucked. And since they're not in control, who else is in control? It's either buyers or sellers. And since they close below, it's sellers. And as you can see, sweep low. We have sweep closure below the fair value gap. So basically, closure below the buyer support. We'll say that. And what happens straight after that? Boom, pretty shit to the downside. Now, where's my other example? Right here. So this is an invalid sweep that happened. So this was so the main range right here was, this was the buy side, this was the sell side, and this was the minor buy side, as you can see. Now, minor buy side still count, and look, we have this top wick, it got swept. We actually had this rejection wick, which can signify a lot, but just one candle is not enough, just because the next candle showed a pretty significant continuation move. Now, what happened after that continuation move? The trend, because it started right here, so the trend switched after this valid liquidity sweep. Why was it valid? You have right here, down close candle, it swept, and then boom, impulsive move up. So you have down close, impulsive move up, basically rejecting this basically rejecting this downwards candle and turning it into a bullish candle, meaning a new trend in meaning a new trend inbound. And then, as you can see right here, we had this pretty significant resistance of liquidity. Price swept, creating a rejection wick, which if price continued to the downside with a rejection candle, meaning a black candle, if it continued with a black candle, it will be a really good indication that price would not hold this level. But since it continued with a continuation candle, this pretty big shit, we actually got up towards this edge of liquidity, which then caused this little downtrend. So as you can see, liquidity sweep, sorry. So let me recap everything in this range. So you have liquidity sweep, liquidity sweep, pretty big rejection candle right here, started a new trend to the upside, and then you have sweep of liquidity right here, that happened right here. You have a rejection candle, but then you have a continuation candle, basically canceling this rejection and continuing the trend. And as you go further, you get a sweep of the real buy side liquidity. You get then an invalid, and then you get a fair value gap, a bullish fair value gap closed by a 50-minute candle, which got a pretty big rejection right here, and then started this little downtrend, which is where price is right now, and then formed the swing high and swing low. So yeah, this is liquidity part 2. They were just 3 topics, just because I wanted to just give one video to these 3 topics, just because of how important they are and how you should study them, because they happen every single time. I mean, you can go check, but like, I know I know that the liquidity sweep, if it's followed by a rejection and the trend switching, is basically going to happen at least 70% of the time. You can correct me if I'm wrong, but I just know my stuff. For example, I can give another example that I just seen right here. You got Asia high right here, right? Look, Asia high got swept, actually creating this downward candle, but then after this downward candle, we have this pretty big continuation candle. And I mean, if you're a swing trader and you trade on candles, you could have just entered right here, stops maybe at this low of the fair value gap, and targeted this Asia high, and yeah, you'll be pretty cleaned up. So yeah, you can see how easy this is, but keep in mind that you should not be entering just off sweeps and not sweeps, just because they are not that viable. I mean, I don't want to say like that, because they are truly viable, but without any further confluence, bias, or whatever like that, they'll never actually be that viable, just because this price action was actually pretty good, and other factors can contribute to this liquidity. But keep in mind that this is also probability. Now, yeah, I hope you guys enjoyed this video. Man, I'm sorry for coughing this whole time, just because I'm really sick, and as you can see, I'm really like screaming at the top of my lungs, just because I'm kind of, I don't know how to say this in English, like my voice is gone. But yeah, that's basically what it is, and I hope you guys enjoyed this video, and God bless you.